Yeah, 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 yeah. Oh, yeah, 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 yeah. Welcome back. Hopefully, everyone's swinging well this week. If you're new to the channel, I post videos about my investing journey every week. In this video, I'll be talking about two ASX quality growth stocks that you can consider adding to your portfolio in June 2020. And no, I'm not talking about the buy now, pay later gods Afterpay and Zip. I'm talking about Aristocrat and Altium. But before we get into it, let's talk about the new market, the Kang Gang. So last week, the markets just went up and down, up and down. And one day I looked at my portfolio. This is exactly how I felt.
Oh my God. I am never going to financially recover from this.
And the next day was the complete opposite. There were two key catalysts this week. One is the fear of the second wave of the coronavirus. So probably in Australia, that's probably likely not going to happen. And in the US, that's a different story. Number two, the US Fed announced that they'll be purchasing debt of individual companies on the bond market. So, what does this mean in plain English? Companies issue bonds to raise money to finance their business activities. So, whoever purchases these bonds, they will receive a regular interest payment. And if the Fed is buying bonds when businesses can't afford to pay regular interest payments, they'll start to lose money.
Money goes brrr.
I think the most important thing in these situations is to stay invested in your long term positions if the fundamentals of the business haven't changed. But you guys will probably know your portfolio better than I do, so I guess you guys can make the best decision whether to sell or not. All right, so let's get into the two growth stocks. The first one's Aristocrat Leisure. Aristocrat is a Australian-based gaming provider and games publisher. They offer a wide range of products and services, including gaming machines, the ones that you see at the casino management systems, and also digital social games. The three main geographical areas that they make their revenue in are the Americas, Australia, and New Zealand. So Aristocrat has a land-based business which manufactures and distributes casino games and also a range of proprietary and licensed games, including slot machines, blackjacks, and roulette. They also have a digital business. You can see that there's a bunch of free-to-play games that they own, from social casual to social casinos. So some of their products include, but are not limited to, Heart of Vegas, Lighting Link, Dragon Lin, Five Dragon Grand, Buffalo Grand, Buffalo Diamond, Jackpot, Magic Slots, Cooking Craze, and Farmville. I'm not talking about the Facebook game Farmville, I'm talking about the gaming machines Farmville. Let's get into the revenue. We can see that revenue has increased on average of around 20% over the last 10 years. From 2015 to 2019, it's almost tripled its revenue from 1.6 billion to 4.4 billion. Net income has almost quadrupled during the same period. Although this year it's expected to slow growth or possibly even have negative growth as land-based businesses close due to COVID. So the next one is segment revenue breakdown. As you can see, the business in the Americas and their digital business segments has been rapidly increasing. Especially now with most people at home, their digital business will probably get a lot more traffic than usual. The other two segments are pretty flat and possibly even decreasing as well. Another thing to note is their margins, which basically means profits. Their profits range from 30 to 55%, which is amazing. So the great thing about Aristocrat over the past few years is their revenue transition from 2016 to 2019. Every year, Aristocrat's digital business makes up more and more of their revenue, from 13.1% in 2016 to 40.7% in 2019. So there's been a transition from land-based to digital over the last few years, while every other segment has become less and less of a percentage of the total revenue. I completely agree with Aristocrat's thinking of diversifying into the digital segments. You can see that before they made most of their revenue from the Americas, and digital was probably one of the lowest ones, but it's quickly surpassed all the other two segments and almost surpassing the Americas right now, not far behind from them. So with this rapid growth, I do expect to see the digital segment being the top revenue maker in the next few years. Aristocrat has continued to expand their business through acquisitions. In 2015, they acquired Video Gaming Technologies for 1.3 billion. So VGT is a supplier of gambling machines. This acquisition tripled their North American business. Later in 2017, they made two acquisitions. First one being Plarium for 500 million. So Plarium is a mobile, social, and web-based game developer. And through this acquisition, they were able to enter the mobile gaming market. I've listed out the games that Plarium owns as well. So the second acquisition in 2017 was Big Fish Games for 900 million. This acquisition allowed Aristocrat to expand into casual games for computers and mobile devices. So the big question is, what's next? In 2019, their financial statements showed that they have 569 million in cash. So it won't be out of the blue that if Aristocrat continue to make further acquisitions to expand their market share and also to enter new markets as well. Let's have a look at the technicals. The technicals suggest that Aristocrat is currently trading below 50-week moving average. We can see that it doesn't really trade below the indicator very often. So in my opinion, if you're looking for a double-digit growth business, definitely don't sleep on Aristocrat. It's currently trading at a price-earnings ratio of around 10, which is 50% lower than its 10-year average price-earnings ratio of 23. So all in all, good revenue growth, good profit growth, good cash flows. Although not many businesses that spend on growth are profitable, this business is, which is highly valuable. Although with their business model transitioning to focus more on digital revenue, it looks like there will be a long runway for growth. The second stock is Altium, which is part of the Wax Group. So for Wax, it's WiseTech, Afterpay, Appen, Altium, and Xero. So Altium designs software that enables engineers to manufacture printed circuit boards for a broad range of devices. So this includes everything from computers to cars and the growing number of interconnected devices like the Internet of Things. In particular, the Internet of Things is a rapidly growing sector, so this provides Altium with plenty of scope to continue to grow strongly over the next 5 to 10 years. So first things first, revenue. In the past 5 years, revenue has grown at an average rate of 20%. So from 80 mil in 2015 to 172 mil in 2019, just over doubling. The net income, which has more than tripled, has increased from 15 mil to 53 mil. Altium has created a plan containing of 4 phases, so rebuilding, performing, leading, and eventually dominating and transforming. The company's aim is to achieve market domination with a revenue of 500 mil and 100,000 subscribers by 2025. Let's get into the share price growth. In 2015, June, the share price was $4.43. And in early 2020, it just went over $40, which equates to almost 10x in just under 6 years. There's not going to be many companies that can achieve 10x in under 6 years. Altium has averaged 69% in share growth in the last 5 years, which is just incredible. Revenue segments. Their revenue is placed into 8 categories. They have Altium Designer software licenses, Altium Designer subscriptions, Octopart searching and advertising, tasking software licenses, tasking maintenance, Altium Nexus, service revenue, and other. So every other segment has achieved rapid growth aside from service revenue and other, which is a smaller part of their revenue. With the world moving towards a subscription economy, I think Part of the appeal is stable earnings as a SaaS company, so that's software as a service. Industries that Altium's products have applications in include automotive, aerospace and defense, life sciences, mobile devices, consumer electronics, and semiconductors. Looking at their high profile customers, they have Tesla, SpaceX, Boeing, NASA, Amazon, Disney, Apple, Bose, Microsoft, Qualcomm. So with these big customers, it just means that Altium's brand is growing strongly amongst a lot of the Fortune 500 companies. And with Altium's strong development pipeline, which is they're promising for the future, the group's new cloud platform, Altium 365, could be the next step towards an integrated design platform for both supply chain and manufacturing. I was scrolling past the top shareholders for Altium and I came across this. Aram Mkaseme, the CEO, has 323.7 million tucked away into the business. I apologize if I don't pronounce that name correctly, but this isn't a small number. It just shows that he isn't there just for his paycheck every year. He's actually there to become a billionaire. There's also two other individuals on the list who are board members, one owning 81.7 million and the other owning 64.7 million. So this is definitely a good indicator that the CEO believes in the business, or else he wouldn't have his money in there. Again, what's next? Altium is on track moving towards its 2025 target of 500 million in revenue and 100k in subscribers. Altium will continue to invest to achieve transformation through dominance with the rule of 50%. So 50% is a combination of revenue growth plus EBITDA margin. Additionally, Altium will continue to pursue partnerships and M&A opportunities, which means mergers and acquisitions. So kind of similar to Aristocrat, to support its long-term vision. So in terms of technicals, pretty similar to Aristocrat, only one indicator. It's currently trading below the 50-week moving average. Again, it doesn't really trade under the 50-week moving average very frequently. In my opinion, I think despite some of the current challenges that Altium is facing with COVID, they have a strong balance sheet to muscle through and continue growing. Again, everyone, this is my opinion, so make your own decisions out there. Let me know what you guys think. Tell me what growth stocks that you guys are looking into as well. I'm going to give a quick portfolio update, so if you guys are keen, then keep watching. The portfolio this week is sitting at $66,955. Terrible week this week, down 3.9%, so that equates to about 2.7 thousand. 2.4 coming from the ASX and the rest coming from the NASDAQ. A few stocks that were down a lot this week were Dicker Data, Sensor Group, and also Kathmandu. Over to the NASDAQ, Facebook was pretty flat this week. On the New York Stock Exchange, UPRO down 450 due to the S&P being down about 1% this week. Over the course of the week, I sold one holding, which was Dicker Data, for a 4.9k gain. So I bought this holding in January 2019, and it's done fairly well over the course of the past year and a half. The reason why I sold it was because I felt that the stock has overextended, and also in times of uncertainty, I thought that maybe cash would have been good to capitalize on any sort of other opportunities available as well. If we look at since first purchase, holdings on the ASX is still up about 3.1k, a majority coming from Macquarie Group at 1.5 and VGS as well for 1.2. Sizzle's coming nicely along as well with 540. Over to the NASDAQ, Facebook is up still $900. Realty Income up 420 and TMF up 774. So overall in the open positions at the moment, still up about 4.9k. If you guys enjoyed this video, please don't forget to smash the thumbs up button and also to subscribe as well. I'll see you guys next week.